Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Coming up on Market to Market. Processing policy and legal challenges in the meat industry. Opening Ukraine's grain pipeline. Water quality remains a challenge for Iowa utilities and farmers.
Speculation, right?
And market analysis with Chris Robinson next.
First dip in corn.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, July 15 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. We saved, we spent, we waited. The global pandemic prompted government stimulus checks that were promptly squirreled away, doled out for a new deck, or a payment in January for a new couch that finally arrived last week. The Consumer Price Index marched higher again in June, this time by 1.3%. driven mostly by higher fuel prices. The core rate strips out the volatile gas and energy sectors, and that was up 0.7% last month. AAA reports the national average for a gallon of regular gasoline has dropped to $4.58, almost 2 bits lower than a month ago. The upward pressure remained in the Producer Price Index, which reflects supply conditions of the economy. The wholesale level rose on the month and 11.3% year over year. Consumers showed resilience in June, pushing retail sales 1% higher as Americans still purchase non-essentials like gadgets and furniture. Now, the links in the supply chain on either side of the meat processing industry have been concerned about prices for years. Earlier this month, Sysco, one of the largest distributors of food, claimed collusion and price fixing among the big 4 packers via a lawsuit. Enter the smaller processors to the fray in an attempt to relieve supply chain challenges and increase their market share. John Torpy has a conversation with those leading the charge.
Owners of small and medium-sized meat processors from across the country gathered in the Midwest this week to examine what the future might hold for their industry.
So we're struggling with the same things that the big packers are struggling with.
Darla Kiesel is the new president of the American Association of Meat Processors, a trade association representing multiple businesses within the meat processing industry. Kiesel notes, confronting labor issues and adapting to changes in government regulations are a different struggle for her association members.
A lot of times we look at what the JBSs and the Tysons and the National Beefs are doing. And these are great companies. The problem is that that doesn't always trickle down to the small processor. Our smokehouses are different than the big boys. And so we have to look at ways with AMP that we can support our meat processors and help them to fix their situations with the Appendix A and B, which is the cooking and cooling of meat products.
Another subject on the table was how to manage the enormous increase in business during the onset of the pandemic, when larger processors were forced to temporarily close. John Tiefenthaler, co-owner of Tiefenthaler Quality Meats in Holstein, Iowa, says while the increase in business has been great, managing the increased volume of new orders has proven stressful.
We're a small family company, and we'd have guys call with semi-loads full of pigs, and think that they could bring them to us and market them through us. And we're not that scale. We're really not. And the pandemic has continued to push us to this, everybody wanting to schedule, we're just so limited on capacity. Our building is only so big. We can only roll so many beef and pork through a week that everybody wants to get in today, and unfortunately we can't take care of everybody.
While the pandemic placed a lot of pressure on small to medium-sized meat processors, association members like Tiefenthaler see it as a mixed blessing.
We were always busy and steadily kept busy, but today I just get so many calls, more people wanting to get in, more people wanting to get in. It just continues on.
Attendance at this year's conference is on track to be the largest in the gathering's 83-year history. Organizers estimate roughly 30% of the attendees represent new processing facilities. For Market to Market, I'm John Torpy.
Multilateral talks have opened the door to getting Ukraine's grain out of ports and onto the world market. David Miller looks at the intricacies of brokering a deal.
Harvest is underway in Ukraine, despite nearby fields being on fire and the need to avoid shell holes and unexploded ordnance. Up until late this week, there was no assurance the 22 million tons of grain trapped inside the Eastern European nation would flow out of the country at its normal rate. After 5 months of war, the door to increasing exports cracked open just enough to give Ukrainian farmers and worldwide customers a glimmer of hope when negotiators from both sides met in Istanbul, Turkey. Before the Russian invasion, Black Sea ports were the primary route for the export of up to 7 million tons of grain per month. Currently, the war has cut that number by 2/3. The effect of severely reducing the flow in the grain export pipeline has increased food insecurity in African nations. Before the war, Ukraine sent 30% of its harvest to Europe, 30% to North Africa, and 40% to Asia. Ukraine is one of the world's largest exporters of wheat, corn, and sunflower oil. According to Turkish Defense Ministry officials, the agreement allows for joint control of the ships containing goods that are traveling in and out of the affected Ukrainian Black Sea ports. Turkish officials say there will be an agreement to sign next week, but experts are cautioning the move won't have an immediate impact on grain exports. For Market to Market, I'm David Miller.
This week's drought monitor revealed a slight improvement in dry conditions as an active weather pattern over the Midwest and Southeast provided ample rain. Tile lines picked up with intensity on the moisture, and water quality monitors are watching the flow to see what's in the stream. Josh Bittner reports in our cover story the improvements made in keeping more nutrients in the field.
Iowa is a leader in several farm commodities, but collateral damage in the form of runoff-impaired waterways has spurred legal actions designed to thwart pollution linked to agriculture. While ultimately dismissed, those moves may have helped cultivate renewed interest in farm conservation.
Because our lawsuit went away, the Raccoon River did not clean up. The Des Moines River did not clean up. There's still nutrient contamination that still needs to be addressed, and we want to have those conversations.
Ted Corrigan is current CEO and general manager of Des Moines Waterworks, which sued farm drainage districts upstream in 2015 over excess nitrates the utility must remove in order to deliver federally compliant clean drinking water.
We're never going to be off the river. We are always going to need direct surface water at Des Moines Waterworks, and so we are always going to fight for water quality.
Critics charge excess fertilizers and manure, applied year over year at similar rates, can build up during drought and flush out of fields with ever wetter spring rains.
This is a nitrate sensor.
The University of Iowa maintains a statewide network of roughly 70 stream bank monitoring sites. The real-time data helps chart progress toward the state's water quality objectives. Iowa adopted the nutrient reduction strategy in 2013, a voluntary open-ended approach to drop nitrogen and phosphorus loads by 45%. The program's own assessments found over 90% of the state's nutrient flows were generated through agriculture. Scientists have long tied farm pollutants in the Mississippi River watershed, where Iowa is grounded, to the Gulf of Mexico's seasonal low-oxygen hypoxic zone.
As I always say, if you're going to have a voluntary strategy, you need to have volunteers.
Chris Jones is an outspoken research engineer with the University of Iowa who says the issue is driven by a combination of ubiquitous, highly efficient farm drainage tiles and relatively low uptake of methods like cover crops, which help slow the flow of water and nutrients off rural landscapes.
There's no magic bullet here. We have a problem of scale. We're trying to farm every piece of farmable land pretty much in the state. We're trying to raise 25 million hogs at any one time, and however many cattle, and 80 million laying chickens.
Jones says researchers estimate some $3 billion is required annually to adequately tackle the problem of flooding and water quality in Iowa's watersheds. So private landowner investment is essential, but elusive.
Can we ever get the water quality we want at the scale at which we're doing things right now? I would say no, we cannot.
As needed, Des Moines Waterworks employs their mammoth but aging nitrate removal facility, which costs around $10,000 per day to operate. The plant was fired up again for 24 days this spring, the first time since 2017. Corrigan says inflation could bump operational supply costs by 10% in subsequent years. Waterworks plans to continue proactively drilling riverside wells to mitigate future nutrient surges.
So incredibly grateful that everybody is here today.
The utility recently announced a groundbreaking partnership between Heartland Cooperative, Waterworks, state, county, and city authorities to purchase a cover crop seeder and encourage more conservation.
We see this single cover crop seeder as the beginning of a whole fleet of these across the state.
We believe that that's the right way to approach these issues, is science-based practices and working together in partnership. And flat out, if you want to see improvement in the water, well, then you've got to see change on the landscape.
We pitched the idea to the whole group and said, we know this is crazy, but what do you think about trying to do what Kansas City did? And there were 4 public entities that didn't laugh us out of the room.
Senior conservation agronomist Ruth McCabe modeled Heartland's project after a similar regional approach. While some local funds trickled down to Iowa through President Biden's American Rescue Plan, participants would still be on the hook for seed and application fees. McCabe says while other cost-sharing programs could allow some first-time adopters to break even, she's witnessed much more aggressive measures in watersheds tied to the Chesapeake Bay in New England.
I think if a farmer could get $80 an acre to use cover crops, I think we'd see a heck of a lot more cover crops on the landscape in Iowa. I could almost guarantee that.
The Iowa legislature has claimed strides toward funding clean water initiatives, but environmental groups say the 2022 session was business as usual. Attempts to funnel tax dollars toward a water quality amendment, as passed overwhelmingly by voters over a decade ago, were shot down once again. State authorities cite a $5 million federal cash infusion for partnership in the Gulf Hypoxia Task Force, as farm interests try to chip away at the problem while avoiding the specter of intrusive federal environmental regulations. For Jones, measures he says lack accountability are still not enough to move the needle, as rural influence can drown out urban concerns on this topic.
We really need to look at some common sense things. We farm right up to the stream banks all over Iowa. Why do we do that? We need rules about, what can be farmed and what the inputs should be and the amounts of inputs. If we want water quality, if that's our priority, we have to be able to talk about things like that.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The weather refused to yield the steering wheel of trade even in a week of USDA news. For the week, the nearby wheat contract plummeted $1.15 or 13%, while September corn dropped by 29 cents. Drier forecasts coupled with a cut in demand provided guidance in the soy complex. The nearby soybean contract lost 47 cents. August meal shed 30 cents per ton. December cotton fell $6.92 per hundredweight. Over in the dairy parlor, August Class 3 milk futures declined by $1.61. The livestock sector was higher as August cattle added 98 cents. August feeders put on $4.62, and the August lean hog contract, well, that improved 65 cents. In the currency markets, U.S. dollar index jumped 111 ticks. August crude oil lost $7.10 per barrel. COMEX gold cut $37.80 per ounce, and the Goldman Sachs Commodity Index fell almost 24 points to finish at $670.50. Joining us now to provide some insight is Chris Robinson. Welcome back, sir. We spent so many weeks writing words for the markets going higher. Now we're running out of words to say the market is going lower. When we start with wheat, plummeted is not accurate. Bottom fell out of the contract. What is happening?
Collapsed. Well, you know, we saw that wheat stocks were tight. We began the year, we knew that. And then we really accelerated with the whole Ukrainian issue. And you saw, you know, when Chicago wheat went from $6.50 to $10, most people were like, that's a great price. That last $3 was really a combination of, I think, panic, speculation. And then we had the daily reminder that inflation, inflation, inflation. So anybody that had missed the year-and-a-half rally, which really just started at the bottom of the that March low, March 20th in 2020, when we shut down the economy for COVID, that was the bottom. So we had this huge rally, everybody missed it, and it was interesting. As soon as all the news was out, you had the UN saying we had 6 weeks left of wheat. You know, that was almost the top within 3 or 4 days. What happened? The market repriced. I think that reality kind of came back in. But to see wheat completely lose the entire rally, we're back to where we were in February, December. So 2022, if you had fallen asleep in December and just woke up today, you missed that whole situation. So it was unusual.
So what do you do now? You've missed the party. Can you still get an invite?
Well, I think most people, you know, when we were at 10, 12, 13-year highs, most people, I think, did some sort of hedging, or certainly if they hadn't, when they've learned a lesson, that when you have those rallies like that, that's when you really need to be doing some sort of risk management. I understand people are afraid to sell ahead because they might not grow the crop, right? But certainly this is the first time probably in a decade, probably since the 08 move where we had that big move where people start to wake up to the importance of using puts. That's really what it comes down to. You get your risk on paper, you don't have the risk of delivering, and you can capture some of that revenue. So,
corn and wheat are often tied together. Are there those that buy and sell corn? Should they be looking and learning from the wheat story as they look at their crop?
Right. Wheat typically takes the sell side of that spread. People will buy corn and beans and sell wheat, and you've seen that really aggressively in the past 2 months as wheat turned first, and then we saw what happened with corn and beans as well. And again, we were right at that critical time, and sometimes it's not even a bunch of new selling came in. It's just there's no more buyers left. And this has been an interesting year. We haven't had a year like this really. You'd have to go back to 08, maybe 12, where we've had these types of swings. And so it's been a learning lesson. And I think, you know, a year and a half ago, we started seeing volatility pick up. And I think that, you know, I would imagine that volatility is going to remain for the next year and a half, especially as we figure out what's really going on with inflation and what's really going on with, are we entering this a recession?
Well, that's a very good transition to our social media question that we have. Shane in Bloomfield, Nebraska is asking, given the 9.1% inflation currently, the new crop price for corn seems undervalued. Does yield and inflation balance each other out, or do they support each other for a new trend in this market?
Well, we had a 2-year $4 rally in corn. That was your inflation rally, really, if you look at it. And then in 2 months, we lost half of it. So, you know, the correction was extreme. We've come back down to that mid-level. These halfway back trades are very important. It gives everybody a chance to reevaluate what's going on. I know there's a lot of arguments out there as to if you do the inflation-adjusted corn, but I think that you can go too far in the weeds on that. What really matters, and I think that your viewers, what really matters is that spreadsheet number. What were my inputs? Where can I sell it? What's my basis? And as long as that is a healthy relationship, I think that the worrying about where it is for inflation adjusted is kind of an exercise that I wouldn't spend a whole lot of time on. I get it. It's something to watch. But at the end of the day, demand trumps everything. And you will see that. You saw that back when we had the, leading up to the whole Chinese, what am I trying to say there?
Well, the Chinese had, they always seem to have some story. Doesn't really matter what it is.
Right. When we had the tariffs, they didn't care. They kept buying it. In fact, they aggressively bought for 2 years in spite of the tariffs and in spite of the high grain prices. So if somebody needs something, if they want the product, they'll come get it. You've seen that here. We were talking about wheat. Yesterday, we had one of the biggest wheat sales we've had in a long, long time. Well, why not? Because we just lost $5 a bushel. They're going to step in there. Right. So I think that's more important to answer that question, demand.
Okay, let's get into the soybean. China, soybeans always go together. But you also mentioned the balance sheet of things. All of a sudden, there was, out of this USDA report, kind of some missing numbers. What's the story?
Well, those numbers really weren't that bearish. Most analysts, I think, if you survey everybody that talks about this, it really wasn't that bearish. The interesting thing was they already took away 75 million bushels of demand for next year's soybeans. So they are factoring in the recession, a worldwide recession. So that's, I think, was the most interesting piece of information in that. The last data dump. And if you look at the actual numbers, if we have any yield problems with soybeans, we're back to pipeline supplies. So those numbers are going to be very, very key. I think the WASDE numbers are going to be fixed point in times where we're going to continue to have these, we call them price discovery days, where we have 40-cent trading ranges as the market figures out where it wants to go. So that volatility is not going to go away. Especially when there's, arguments about what the carryout's going to be.
You mentioned weather as a story in your newsletters this week. Is the weather factor, how big of a driver is it in new crop beans?
For new crop beans, I don't think it's that big a factor yet because beans are made in August. Really what's driving us now is what's going to happen with corn pollination. And we saw, a week ago, Sunday, it was hot and dry and people could not own enough corn. After that $2 break, we were right back up to $6.50, $6.58 new crop corn. That was a huge rally. A lot of people thought, oh, it's game on. It's 1988 all over again. Here we go. Or certainly 2012 all over again. That did not come through because 24 hours later, we were back down on the lows. And that was, I think, the carryover from the concern that we're heading into or possibly heading into a worldwide recession. The managed money, the money flow, has trumped, I think, the fundamentals right now because that's the only reason. You saw crude oil break $23 a barrel. You saw cotton. Every commodity out there had a tremendous sell-off. As soon as Chairman Powell mentioned the possibility that we'd have a recession, they've sold every rally, and they've lightened that position up, and that's what's really helped push a lot of these commodities down.
I'm going to have to get your thought on cotton in the Market Plus. I need to move to cattle quickly.
Yep.
For the sake of, there's this, we'll have another question about it in Market Plus. There's these sales in Texas and other big areas. Is that driving the market higher, or is this we're benefiting from lower grain?
Well, the herd's getting smaller. It's going to be, I think, the smallest herd in at least 8 years. The last, what we're expecting, I think it dropped another 3%. So the herd's getting smaller. And that's not really that surprising, right? You've had input costs go through the roof for everything, diesel. Now you've had that drought in Texas, which has really hurt. If you can't feed the animals, people are not going to keep buying feed for the animals. The hay has gone from $50 a barrel to $150 a bale, excuse me, not a barrel. So that's, if your input price has doubled and tripled, people are going to make the decision, and it's a painful decision. I get it, but we have to reload. We can't keep throwing good money after bad. So yeah, you're seeing these animals come to market. There's a silver lining to that. We've had actually a rally recently. When corn dropped $2, that took a lot of heat off the feeders. Feeders had we've had a nice $17 rally. We had a 4-month high. So there's always a silver lining to it. I know what's going on in Texas there is a sad situation, but I think that's more local. That drought is very, very bad.
Real quickly on hogs, we finally reversed a trend. Does that continue higher now?
You've had really good demand. And I think that's something to continue to watch. We broke out of that range for a long, long time. We couldn't get through this price resistance. I think the other thing is, too, you get this natural thing. We talk about money flow. Money flow is coming probably back into the long side onto the pork complex because the idea is, well, if the economy slows down, people aren't going to buy beef, they'll buy more pork. So I think that's going to be supportive there.
I have to put a pin in it. We'll keep it going on Market Plus. Thanks,
okay,
Chris.
Thanks.
All right, that's, as I said, we'll pause analysis. We'll continue with Chris and answer more of your questions that you submitted in Market Plus. Find that on our website at markettomarket.org. It'll be both in podcast form as well as on YouTube. All of these resources, by the way, are free. Stay away from the summer slide in your knowledge in our Market to Market classroom. Check out our modules offered on the 1980s farm crisis, science and technology, as well as the role of government. Visit markettomarket.org/classroom to enroll. Next week, we look at the sunflower industry adjusting to global changes. Thank you so very much for watching and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.